So hello guys, it's me here. Today we have a new video. As always, we trade options. I'll leave the broker link in the pinned comment. I hope you watched my previous videos, because if not, you missed a lot and you will not understand how a beginner can start earning on options completely from zero. I explained those strategies that basically don't require any special knowledge, don't require a big balance. You just take and repeat what I show and start making money. Let's begin. Today we have similar strategies as always. Everything is very simple and as always it just works. So let's choose the indicators together and decide which ones we'll trade with. In the previous video we used the alligator indicator. Today I suggest we start with moving averages. Basically the difference from alligator is that you choose the number of lines on the chart yourself. Let's make the first moving average with a period of 20, make it green. The second moving average will stay at period 10. We'll only change the style, we'll choose the red color, and this is the picture we get. Notice that when the red line crosses the green one from the bottom to top, we have an upward trend. When the crossing happens from top to bottom, we have a downward trend. So this is the logic we'll use to open trades. If you didn't watch the video about the alligator, the principle of this indicator and today's trading is more or less similar. All you need is to react in time to price changes, watch the moving average crossings, and have some basic technical analysis knowledge, especially support and resistance zones. That will be a big plus. If you don't know anything yet, just watch and repeat what I show you today. All right, let's begin. Let's scroll the chart back. We go to the very first asset. Here we have the Australian dollar and Canadian dollar currency pair. Let's start. Right now we have an upward movement. Expiration time is 1 minute. Here I open trades only based on moving average crossing. You can see that the red moving average is about to cross the green one from bottom to top. We open a position at this point for an upward move, meaning continuation of this impulse, and wait for the result. If the trade closes in a loss, then in that case most likely it's because we open here at the price maximum near the resistance zone. Near a resistance zone you should open only for a downward move, but right now this trade can be used as an example of what not to do. Notice that we have a moving average crossing here, but at the same time the price is near a resistance zone. And what do you think is stronger? The moving average crossing or the resistance zone? Obviously the resistance zone is always stronger than any indicator signal. Everything should work together. Here we should have opened only for a downward move, because if you zoom out the chart, you'll notice a resistance zone here, and the price touched the zone 3 times and reversed 3 times. So logically the correct decision was to open a trade downward. This trade ended in a loss, but now we'll fix everything. The next position will be for $300, a modest $300 trade. Let's find the next trade, analyze it, and open again. So look, we'll open on this asset. Here we again place a horizontal support level. Notice the situation here is a little different. We don't see any crossings yet, except that the last crossing in this area happened at this point, meaning the price was at a maximum. Then we had an approach to the support zone. Notice that the price already reacted many times from the support zone. There were many touches, price moving downward, approach to support. There are still no moving average crossings. Instead we have divergence, and the red moving average went much lower than the green one. So here we open only from the support zone for a correction, because we already noticed the reactions in the opposite direction from this level before. That's why we open here only for a correction for 1 minute. Small trade amount, short expiration time, and now we wait for the result while analyzing another situation. Here we have a similar situation, Euro and Russian ruble currency pair, similar to the previous one, the one we're trading now. Here the price is also at the minimum near the support zone. No moving average crossing yet. We open a position upward, open for $1. Then we open for $100 at this point. And by the way, now we opened in the more or less good position when the price dropped a bit lower to the level. Again, we wait for the result. Here, because the price dropped very sharply to the support zone, most likely there will be a good upward impulse from the support zone. And here, look at the situation. A correction happens. Since seller pressure remains and overall trend is downward, our position closed in a loss. Let's open a $900 position at this point. You see the correction happened, but our trade closed in a loss. So after the correction, we open a position for a continuation of this upward impulse, now for $900. And here's our next position. The price is stuck between two fires. And unfortunately, our $100 position closes in a loss. We open again for $300 from this level. Right now, in these two situations, we're trading from the levels. As you can see, we don't have any clear signals from the moving averages, so we rely on technical analysis knowledge and understanding of how levels work. This position will most likely close in profit. See a very good impulse happened after our position closed in a loss. Because of the correction, we open again for continuation and locked in nice profit. Of course, we're in a little loss right now, but I think overall we'll recover it pretty successfully. On this asset, the downward move continues, although logically we can assume that the price only now reached the needed level. Everything we opened earlier wasn't really at the level, it was just a zone. And now the price has finally reached the main support zone and is reversing. Notice this by a very simple signal, a sharp bounce upward and formation of a large lower wick on the red candle. We open again for $900 and wait for the result. Let's find something that matches our conditions, specifically moving average crossings. All right, we're searching, friends. Look, the payout percentage on many assets has already dropped. We can open on this asset. Let's make a small $100 trade. Here, after a downward move, the price reverses. There was already a correction, but this can be considered a full reversal now. The last signal for a rise at this point, so we have a reversal and a large lower wick formed on the candle. Just look at how annoying this currency pair is here. It doesn't want to close us in profit, but we'll finish this position. If you look at previous movements, you can see that in this area there were many fluctuations. Kept coming back to the zone over and over again, and right now I'm also not on the best entry point. I rushed a bit to stay within the time, so I'm showing situations like this. In general, the situation here can change since the price has already reached its minimum. If we look at previous movements, it had to return to this level twice in order to finally go higher. So in theory, there could be a strong impulse from the support zone, like in previous moves. The previous position on the Russian ruble closed in profit. That's good. So that's the situation, but it doesn't want to work with us, doesn't want to, so we'll force it. We set 3 seconds. We open position on the impulse. We took a small profit. You can see the correction. The correction happened. Against the correction, we open a trade. 45K 103. We recovered all losing positions. There was another sharp impulse. 46K $471 on the balance. Sometimes I also use this method if there is a situation where I wanted to trade, but it somehow went against me. I use a scalping strategy based on the idea that when a sharp impulse happens, for example, downward, then usually after a few seconds the price bounces in the opposite direction, meaning it goes back up. And now I opened positions twice with the amounts I needed. As you can see, I successfully recovered the losses and moved to the profit I was aiming for. So we returned to the original $100. We recovered losses, traded in situations where it's not really ideal to trade, and got this result. In any case, today we definitely made money. So let's find another situation, something nicer. Because I want to fully show you how crossings work. But today the market is kind of heavy. There are no strong signals for growth or continuations. Although look at this asset. Let's open a small $100 trade. Pay attention to how the price behaves. First, we have an upward trend moving in this channel. Every time it reaches a high, it pulls back. Here we already see the continuation of the downward impulse. The moving average is crossed. Price moved down. And we opened for a continuation of the drop. And again, we catch a correction. We're really lucky with corrections today. So friends, don't get discouraged when you take random losses, even if your sure analysis is correct. This is completely normal in the market. Sometimes there are days when trading just doesn't go well at all and everything goes against you. Don't be upset. Either you try to recover those losses or you simply stop trading that day. You keep your balance and come back the next day to try again and recover what you've lost. It's better to act like this. Today trading turned out quite risky, even educational, I would say. So I hope you liked the video, like and subscribe. Thanks for watching and see you next time.